How you doing? I'm Big D. Welcome to the show. What I'd like to talk to you about today is what is going on with silver and gold. I think if you're a stacker, you've been stacking for multiple years. If you're someone who is just beginning to look into silver, or if you are a novice but have some silver, I think this is where you need to be. Look out for your families, and one way to do that is with precious metals. The dollar. Saving the dollar is not what you need. Let me be very careful, because what I'm about to say could be the difference between building generational wealth and watching everything you work for get vaporized in the next leg down of this metal market. Right now, as you sit there watching this video, precious metal market has gone quiet. Gold is consolidating. Silver is hovering, and most people, most amateur, emotional, financially illiterate people are looking at this quiet and saying, good, stabilization. It's resting. It's getting ready to go higher. And I am here to tell you, with everything I know for years of studying money and commodities, the pattern of the rich versus the pattern of the broke. That's this quiet. This quiet is not your friend. This quiet is not stabilization. This quiet is the silence before a financial massacre. The volatility is dying out. And that means the market is loading the gun for its next move. And if you don't understand what direction that gun is pointing, it is pointing directly at your portfolio. I don't care about your feelings. I care about your money. Right now, your money is in serious danger. Before I go any further, please like, share, and subscribe. I'm just building a show, and I need your help. I'm about to break down for you the specific levels, the specific signals, the exact chart patterns that the wealthiest traders in the world use to navigate markets like this one. This is the kind of intelligence with financial advisors charge thousands of dollars an hour to deliver. You're getting it here for free because I believe in helping others. And I've been on other shows trying to do the same thing for other people. And I'm back to YouTube trying to build this channel because I think YouTube is a bigger platform. But I need your commitment. Please subscribe, hit the notification bell for all, especially if you want to see shows like this. Because if you miss the next one, you might miss the warning that saves your financial life. Let me give you the philosophical foundation you need before we get into this chart. Because without this foundation, the chart means nothing to you. Now, if you've been part of the show and you've been coming back regularly, you may have heard me thousands of times. Cash is trash, and I mean it. Every dollar you hold in a savings account, every dollar sitting in a checking account, earning nothing, is a dollar that inflation is slowly murdering. The Federal Reserve has seen to it, has seen to make sure that happens. The government has seen that. The banking system has designed to transfer wealth from people who don't understand money to people who do. That is a hot conspiracy theory. That is not. This is the mathematical reality of the fiat currency. So when I say cash is trash, I mean in every fiber of my being. And the numbers back up what I'm saying. But here's what most people get wrong. And this is the brutal truth I need you to hear today. There is something worse than holding cash, and that is buying an asset at the top with your emotions running to show because some social media influencer told you that the silver was going to $500 an ounce, and you believed them because you wanted to believe them because you were so desperate to finally be on the right side of a trade that threw caution to the wind. You ignored the charts. You ignored the signals in the pile and with every dollar you had. That is not investing. That is gambling. And unlike a casino, you didn't even have the house probability on your side. You had hope, and hope is not a strategy. Hope is for losers. The rich do not operate on hope. The rich operate on probability. Think about a casino for a moment. A casino does not win every single hand. It does not win every single spin of the roulette wheel. What it does is takes thousands and thousands of small bets, and each one tilted slightly in its favor. And over time, mathematically, inevitably, it wins. This is exactly how the world's best traders operate. They do not need to win every trade. They need their win rate, their probability adjusted edge to be consistently above 50%, ideally above 70%. And then they execute that edge over and over again with discipline and without emotion. The charts give them that edge. Pattern recognition gives them the edge. And the moment emotion enters the equation, that moment you start buying because you feel excited or because someone on the internet made you feel like you were missing out. You have surrendered your edge and you have become the amateur on the other side of the rich man's trade. Now, I also want to address the noise machine directly because it is a dangerous and it is everywhere. Mainstream media will give you reasons for every move that the market makes. It goes up, strong demand, supply shortages, geopolitical tensions. It goes down, profit taking, dollar strength, technical corrections. They will never ever tell you in advance what is coming because they don't know. And because their business model depends on you staying engaged and emotional. Social media is even worse. Social media gave you people screaming that silver was going to $500 an ounce, that Bitcoin was going to $250,000 by the end of 2025. These are not analysts. These are entertainers, and they're definitely entertaining you into poverty. The charts don't have an agenda. The charts don't get paid for clicks. The charts are the accumulated results of every buyer and every seller who ever participated in the market. Every fear, every greed, every hope, every panic compressed into price action. And that price action tells the truth when nothing else will. Now let's talk about gold. Let's talk about the map. I wanted you to understand something important before I lay these numbers out for you. This is the map that the rich use. This is the map that makes people money. This is what happens in the trading room and the hedge funds and the family offices of people who have more money than most people will see in 10 lifetimes. They read charts. They identify levels. They execute at those levels and with discipline. And you can do the same thing, but you have to listen. Gold has a very clear resistance zone right now between $5,100 and $5,125. This is not a random number I pulled out of thin air. That comes from a specific pivot point in recent price history. A consolidation area where the market previously paused, where buyers and sellers fought each other to a temporary draw, and where that price level burned itself into the past. Memory of the market. Markets have memory. When price returns to a level where something significant previously happened, it tends to reach that level again. This is not magic. That is human psychology, repeated over and over again across every asset class in history. Now, here's what happens at the recent high in gold. And I need you to pay very close attention to this because this is a masterclass in reading a chart. Gold had 7 consecutive up candles, 7 days in the row of high prices. And then on day 8, you got that technical analysis called a Doge candle. A Doge candle, I might be pronouncing that wrong, but a Doge candle is where the price opens and closes at virtually the same level, meaning that over the course of the entire trading session, with all the buying and all the selling, the market went nowhere. But here's what makes it significant. The price traveling significantly higher during that session and significantly lower at the end, up right where it started. That tells you that the bulls pushed it up and the bears pushed it down, and they settled into a perfect stalemate. Now, if that kind of candle appears at the bottom of a downtrend, it signals a potential reversal higher. But when it appears at the top, after 7 consecutive up days at a major resistant level, it tells you that one devastating the market has run out of buyers. The people who wanted to buy gold have already bought it, and there's nobody left to push it higher. That is a mathematical signal that a top is forming. And sure enough, that followed. A massive down day, then continuation, then a short-term low that supported right at the bottom. Now, a level that had previously acted as resistance and once broke to upside converted to support. This is one of the most fundamental and reliable principles in all of technical analysis. Resistance becomes support. It is not theory. It is a pattern that repeats because of the psychology of the participants who created that level in the first place. People who missed the original breakout wait for price to come back to the level and buy. People who were caught short to cover their positions, there and those combined create a floor. So here's where gold stands right now. It has bounced from the support zone and is consolidating. It is chopped sideways. And here is the critical distinction between gold and silver. Right now, gold is consolidating in the upper half of its range near the resistance zone. This means if there's any positive catalyst, any real buying momentum, gold has a shot at breaking through that resistance and making a run towards the next major level, which would be to double the top zone somewhere between $5,400 and $5,600. This is the bull case for gold. It is not guaranteed. Nothing in the business is ever guaranteed. But gold is at least positioning where the math gives it a fighting chance. Silver, on the other hand, it is a completely different situation. And silver situation is the one that should terrify you. Let me talk about silver right now. And I want to be very direct and very blunt because I think silver is in serious danger. And I think millions of people who bought silver because someone online told them it was going to $500 are about to learn a very, very expensive lesson. The numbers don't lie. And the chart is screaming a warning signal that most people are too financially illiterate to read. Here's what happened at the silver highs. At the peak of all time, high territory for silver, the market printed what technical analysis called a topping tall candle. Let me explain exactly what that means, because this is one of the most powerful and most precise reversal signals in all of technical analysis, and you need to understand it completely. A topping tail candle is defined by three specific non-negotiable criteria. First, it must occur at the highs of a chart at a 52-week high and an all-time high. It cannot be meaningfully signaled anywhere else. It only carries its full weight and power when it appears at the very top of the major move. When the market is in euphoria, when everyone is excited, when the social media crowd is screaming about $500 silver, second, the candle must close at the lower 25% of its entire range. That means from the absolute low of that candle to absolute high, including every part of the wick. The closing price must be in the bottom quarter of that total distance. That's what tells you it is that, yes, the price shot up dramatically during that session. The bulls were in full control early, and then systematically, ruthlessly, the sellers came in and drove the price all the way back down, leaving behind this long upper tail. This topping tail that is the fingerprint of massive selling pressure at the top. Third, and this is the critical rule that determines whether the signal is still alive. The topping tail only fails if you get a subsequent daily close above the high of the topping tail candle itself. If price pushes up but cannot close above that high on a daily basis, the signal remains fully intact. It remains the dominant interpretation of what is happening in the market, and silver never did it. Price attempted to reclaim that level, and it rallied back up. The bulls made their case, but at the end of the trading session, when all the noise died down and at the closing bell rang, silver could not close above the high of that topping tail, which means the signal is still active, which means the interpretation stands. That topping tail was the market telling you in the clearest possible language, the chart has that top has been established, and now look at where silver sits. It bounced, it retested, it consolidated, and right now it is hovering just above a critical zone, about $85 at close of yesterday. They say that you're broke and you don't even know it. If you're sitting there looking at the level and thinking, great, it held, we're going higher, but what that level represents is the context of everything I described is the last line of defense before a full-scale capitulation move to the downside. The volatility is dying out. The market is forming what's called an inside bar, a bar flag formation, a consolidation pattern after a sharp downward move. And when you see an inside bar consolidate after a sharp down move with price sitting at the low end of that range near major support, the mathematical probability, not my opinion, not my feelings, the mathematical probability based on decades of pattern data is that eventually that support breaks and the market flushes to the next major level lower. And what is that major level lower to silver? Looks like it could be between $50 and $54 an ounce. That is roughly 25 to 30% decline for current levels. Let me say that again so it sinks in. If the pattern plays out the way the math says it most likely will. Silver could fall another 25 to 30% from here. So if you bought silver at the highs because someone told you it was going to $500 and you're sitting on losses and you think the worst is over, listen to me very carefully. The chart is telling you that the worst may not be over. Stop being a victim. Get out of the emotional analysts and get into mathematical analysts. Know your levels. If that breaks you into the $50 to $54 range, that is your reality. The numbers don't lie. Let me explain the battlefield, because gold and silver are not the only metals telling the story. The entire complex is sending the same message, and I want you to see the full picture, because winners see the whole battlefield, not just one corner of it. Platinum is showing the same technical structure. Resistance sits at $2,335 with an additional resistance above that at $2,465. The chart is showing a downward move followed by an inside bar consolidation. The same pattern we just described in silver. The same pattern that mathematically suggests further downside. And the support level that matters most for platinum, the level where I would personally begin looking at buying, is around $1,700. That is my opinion. So go with what you feel and with your own research tells you. I'm just giving you a direction and possibly what is going to happen. Now that is the number that comes directly from the chart and from previous significant price pivots that the market has established over time, and the price will likely recognize again when it arrives there. Now please watch to the end, because I have more information to tell you that silver, especially silver, is not going to stay low if it does hit 50 to 54. But there's reasons, so please stick around. Now the buy target at palladium, based on previous pivot highs and lows, that now serves as a magnetic price level on the chart, is somewhere in the range of $1,320 to $1,350. If palladium breaks down from its current consolidation, that is where I expect to find it hits real support. And it's real buyers. Potential real value. Now here, not in the middle of consolidation. That is likely resolving to the downside. But the metal I want to spend an extra moment on is copper, because copper is not just precious metal play. Copper is the economic barometer of the entire global economy. Copper goes into everything: construction, electronics, electric vehicles, infrastructure, gas-powered vehicles. I mean, you could look at any piece of electronic and find copper in it. It means the global economy is expanding. When copper is failing, it is telling you something deeply ominous about where economic growth is heading. Right now, Copper's chart is painting a picture that could concern every single person watching this video. Whether you invest in metals or not, copper has formed a beautiful, mathematically precise pattern of high pivot to high pivot, a series of low highs that trace out a clear downward resistance line. Price pierced above that resistance briefly, creating excitement and giving the bulls hope, but it never established a sustained close above it. Now, copper has made a sharp downward move, followed by, you guessed it, an inside bar consolidation. Same pattern, same math, same implications, and the target, if we enter a recession and the data is increasingly suggested, we might. It is a return to the chain of pivotal lows that stretched all the way back, ultimately targeting somewhere around $4.50 a pound by late 2026. Even though the market, it's hard to find copper, and mining is not producing what it used to. They're going deeper and deeper to get the precious metal. Some people might not call it a precious metal, but it is, my opinion. Now, what is the most economical sensitive commodity on the planet? It's potentially pointing towards a recession of significant depth. And the average person sitting at home has absolutely no idea because they're watching the wrong channels and listening to the wrong voices. Stop being a victim. Look at the data. The numbers don't lie. Now, I am going to give you something practical, but I am not here just to scare you. I am here to arm you. A general does not just tell his troops that the enemy is coming. A general gives his troops a battle plan, the weapons as well, and the tools needed. And here's your battle plan for navigating this metal market over the coming months. Rule number 1, know your level before you make a single move. This is not negotiable. Before you buy anything, before you buy or sell anything, before you touch a single dollar of your money in any metals market, you must know your resistance level above and your support levels below. For gold, that means knowing that $5,100 to $5,125 gold is where the sellers are waiting. But $4,300 to $4,400 is where the buyers are waiting. Now, as far as silver, $70 to $71 is your critical support, and $92 to $93 is your resistance above for silver. You operate within these parameters. You do not chase. You do not buy because it feels good. You buy at a level with your plan and do not deviate from the plan because of the noise. Rule number 2, understand what consolidation means and respect what it's telling you. When a market goes quiet after a sharp move down, it is not recovering. It is digesting. It is the calm that precedes the next direction or directional move. The question you must always ask is consolidation is which direction is the market likely to resolve? And the answer comes from the position of the consolidation within the broader range. If it's at the top of the range, near resistance, after a sharp move up, the resolution is likely down. If it isn't at the bottom of the range, near support, after a sharp move down, that resolution is also likely down because the path of least resistance and the bar structure is consolidation. Silver is at the bottom of its range. The resolution per the math is likely lower. Position accordingly. Rule number 3, use probability like a business, not like a prayer. The casino does not walk into the morning hoping the dice will be kind. The casino has a mathematical edge and executes the edge systematically thousands of times without emotion. Your job as an investor is to identify the highest probability setups. Define your risk meaning, the exact price at which you know you are wrong, and that takes the trade with discipline and back. Execute is consistently over time over large enough samples of high probability trades. The math works in your favor. 1 trade, 2 trade, 5 trades, whatever it is. You might lose any of those. But 50 trades, 100 trades with consistent edge above 60 to 70% minus the math starts looking like a casino balance sheet, not a gambler's regret. Rule number 4, wait for the flush. Do not try to catch the falling knife. The smart money, the money that actually compounds over decades, does not buy on the way down, hoping it has found the bottom. It waits. It lets the weak hands get shaken out. It lets the panic sellers finish their selling. It waits for a price to arrive with a mathematically defined support level, a real level, a chart-based level, not a guess. And then it buys with size and with conviction because it knows the probability is on its side. For gold, that level is $4,300 to $4,400. Hopefully it goes back to there and we can actually purchase without having too much regret. Now for silver, if silver hits 70 to 71 breaks, wait for the $50 to $54. Do you, but I'm just saying, the $50 to $54 is a probability, a possibility, but we have to see. There's no guarantees. It would be nice though, right? Now for platinum, wait for about $1,700. Again, do your own due diligence. Look at my disclaimer in the description below, because I am not a professional, just someone who's been doing this for quite some time. Have your shopping list ready, have your level set, and then have the discipline to wait. No matter how uncomfortable the waiting feels. Rule number 5, never ever let someone else's excitement become your financial decision. The social media crowd was screaming above $500 silver. It could be a lot higher than that. Where is that crowd now? Have they apologized to the people they let into that trade at the top? Of course not, because they are entertainers, not investors. Your money is your responsibility. Your financial future is your responsibility. I can say one thing. If that is what happened, and you bought at the $100 range, $120 range, I do believe silver is going to go well above that. I think we have a huge future if you're a silver owner, silver stacker. But right now, there's a lot of shady things going on. When paper silver goes away, silver's going to start making its way up. When the new policy changes, where there's going to be a floor for silver, so the mines can make some money, and no more manipulation by deep state banks, etc. I think we're going to see silver making some nice moves. No one knows where it's going to go, but so let's get back to the show. No one else is going to save you. Stop outsourcing your thinking to people who incentivize, are not aligned with your wealth. Do the work, learn the charts, know your levels, make your own decision based on mathematics and probability. Not on fear of missing out and not on someone else's excitement. Let me ask you a direct question, and I want you to answer it honestly. Not to me, but to yourself. I don't care about your feelings. I care about your money and your future, just like I care about mine. Are you going to be a winner or are you going to be a loser? This is not a rhetorical question. This is the most important financial question you will ever ask yourself, because the answer determines everything. The winner watches the market so quiet and asks, what is the chart telling me? What are my levels? What is the highest probability outcome, and how do I position for it? The losers watch a market so quietly and say, good, it's stabilizing. I'll wait and see what happens. The winner has plans before the move occurs. The loser reacts after the move has already cost them money. The winner uses mathematics and probability to make decisions. The loser uses hope and emotion. And the brutal truth of financial markets is that the market will transfer wealth from one loser to the winner every single broad time, without remorse, without apology, and without any regret for how hard you worked to earn that money or how much you need it. Gold is showing you caution. Silver is showing you danger. Copper is showing you a potential recession signal. Platinum and palladium are confirming the same broad thesis. The metals complex is quiet right now. And that quiet is not peace. That quiet is preparation. The question is, are you prepared? Do you have your levels? Do you know your plan? Do you have the discipline to execute it without emotion when the moment comes? If the answer is yes, then you are thinking like a winner. And I'm proud of you. And I want you to keep doing the work. If the answer is no, if you still operate on a hope and hype and social media excitement, then I need you to stop. Stop right now. Do the work. Learn the charts. Define your levels. Build your plan, because the market is getting ready for its next move. And when that move comes, there will be winners who were prepared, and there will be losers who were sleeping. Do not be the one who was sleeping. Please subscribe to this channel. Share this video with someone who needs to hear this. And I do believe I've come to you with the best scenarios. And I've done my research, so I believe it's going to be somewhere around there before the move changes. Remember, there's always a deficit with silver. There has been for several years. Whatever happens in a short period of time, it's the playing of the manipulation factor. Try to have a great rest of your day, and God bless.